30 minutes until the start of trading, and we are rallying again. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
It looks like an unstoppable rally. The S&P 500 has gone 107 sessions without a drop of 2% or more. That's the longest stretch we've seen since July of last year.
And adding to that, AI optimism boosting stocks this morning, with Alibaba pledging more spending and Micron delivering a solid outlook.
Plus, fintech looks to private credit. PayPal teams up with Blue Owl for a $7 billion buy now, pay later deal.
Well, Matt, it doesn't matter whether it's a U.S. stock or a Chinese stock. If you're spending more on AI, you are rallying. And Alibaba is rallying this morning, up 8.6%, helping the tech sector after revealing plans to ramp up its AI spending past an original $50 billion plus target over the next 3 years. The company also plans to launch its first data center in Brazil, France, and the Netherlands. Matt, all of that happening in the coming year.
All right, that's really spurring some optimism this morning. The Trump administration is seeking an equity stake in Lithium Americas as it renegotiates terms of a $2.3 billion Energy Department loan. Lithium says it offered a 5 to 10% stake via no-cost warrants, and you can see the shares of this. Honestly, it's a very small cap stock, but absolutely soaring, up almost 70% this morning.
Yeah, that is a huge move. Let's get back to the Alibaba move, though, because the news that it's set to hike its AI Capex is sending shares of other Chinese tech giants higher this morning. Let's discuss with Bloomberg Tech co-host Caroline Hyde. Caroline, what exactly is Alibaba playing? And is this just like the ultimate FOMO thing? Everybody else is spending, so we have to spend more.
And people feel that this is a vindication that they're actually managing to see ROAI. Basically, they say that we've got the confidence to be upping our spending up to more than $53 billion worth because we see a trajectory where we make money. We make money on the cloud, the fact that we're offering that to our clients, and they do that worldwide. And as you say, they're building out data centers worldwide. But also, they're trying to be all things to all people. Remember, this is another example of the way that Amazon is working, where you offer the compute, but you also offer underlying large language models as well. So we've got them building their own. Qwen 3 Max has really come out and impressed people with its capabilities. China is hot on the heels of all things United States. They're building large language models. They're offering the cloud, but also notably, they're building their own hardware. And I think this is what's been so interesting in our conversations. How will they reduce their reliance on NVIDIA? They're saying they're buying some of the software packages from NVIDIA more broadly, and they are looking to do that for physical AI, for use within robotics. But they're trying to disentangle their dependence on NVIDIA's actual chips. They say they're going to be providing their own. They've got a key customer. Chinese state media have said already one of their telecoms giants is going to be buying up their hardware, their their overall chips. But what's interesting is we don't know how they're going to make them, who's actually manufacturing them for them.
So that's one piece of the AI puzzle. Another piece,
the other 50 billion, you know.
I just want to talk about, for a moment, the most boring piece. I started my career covering Micron and the commoditized memory chips, then known as DRAM. Now I know we've added a high bandwidth to the front of that name. But how has this company doubled in market cap this year?
Because its margins are more than 50%, and it's blowing people out the water. And what's interesting is Vital Knowledge and some of the analysts out there are saying it is the boring bit, Matt. It is your old school
this
coverage.
This is the picks and shovels.
Yeah, it's PCs and servers that are also seeing the demand for memory, not just the incredibly sexy accelerator AI part of the business, which is the high bandwidth memory. This is a company, the only US maker of memory. So no wonder they're managing to tear up in terms of market share, and they want to hold about 20% of the high bandwidth memory going forward worldwide. So really, they're talking up a big game, particularly in the energy efficiency of their chips as well, and the power that they can provide.
And all of this money and all of this spend just emphasized by Oracle with earlier this hour, a bond sale looking for $15 billion, a 40-year bond, which is pretty rare and a long time period for an environment which who knows what things will look like in 40 years. And the spreads are pretty tight on this
Only
thing.
165 basis points over treasuries, and then they've got a 20-year, they've got a 10-year, they've got a 30-year. This is a company that, at the moment, Bloomberg Intelligence already putting out a react saying this company might have $100 billion in leverage, in debt, going forward. But it has to. We are seeing companies having to get more and more creative about the way in which they raise financing. Look, yesterday, after the bell, we heard from Sam Altman saying, we've got Stargate, 5 new locations. They're across Texas and Middle America and Ohio. What's interesting is he said the financing for these data centers, we've not quite worked out yet. And interestingly, that's where perhaps NVIDIA comes in, because the $100 billion commitment in OpenAI equity, well, the reporting from Shireen Ghaffari is saying that's going to make OpenAI's ability to raise debt easier. They've got a backing from an equity perspective, and now they can get more creative in financing. But look, we're kind of making up this road as we go along. This is the debt market, though, really wanting to get the exposure that the equity market's been getting to this AI trade.
By the way, real circular economy
totally.
going on here amongst these sort of incestuous giant AI companies.
I buy your equity, you buy my GPUs, that's the way it works.
Exactly. Oracle, by the way, is another company that's almost doubled in market cap so far year to date. Up 88%. It's worth $892 billion.
By the way, one argument, though, of the circularness of it that I saw out there was otherwise someone like an NVIDIA would just be doing stock buybacks or dividends, and maybe it's better that they reinvest it into some of its
their own customers.
Yeah, exactly. Maybe that's a better use of capital.
All right, Caroline Hyde, we're going to be watching Bloomberg Tech to see how you and Ed Ludlow cover these amazing moves. The Trump administration, speaking of amazing moves, looking to take a stake in yet another company. Reports say the U.S. is seeking a 10% position in Lithium Americas. The administration says it's going to help speed up the development of local supply chains in critical minerals. Joining us with more is Michael Ball, macro strategist for Bloomberg Live Markets. And Michael, this isn't the first purchase they've made in this supply chain, right? They have MP Materials. And are we really looking to mine and refine these rare earth minerals here in the U.S.?
Yes, we have to. I mean, again, China has 75% of lithium refining capacity. They were smart, as they were with rare earths during Trump 1.0, seeing where things were going. And they prepared for this moment where they knew there'd be a further conflict with the U.S. on the broader relationship, not just trade, but how we're going to sort of think about the multipolar world developing from this unipolar world.
Can I just ask, I understand the strategic reasons for doing this, but from the industry experts with whom I've spoken, it's too dirty and it's too dangerous to actually do the entire chain here in the U.S. I mean, people are seriously injured and die on an almost daily basis doing this job in China.
Right. And in a normal world, yes, but because of the priorities of national security, some of that will probably be looked differently upon, meaning that they'll change the regulations and the actual, we're not there yet. This is going to be a 5-year. They're hoping to get this done by 2030 to actually have refining capacity at a level where you can get 600, 700,000 batteries for EVs. But look, it's going to be a slow up and down process. We'll see what the next administration does, as it won't always be Trump. And this is a multi-decade kind of plan for both rare earths and for the refining of lithium. And oh, by the way, there's many other areas, as we've talked about, where we're going to have to get back to copper. That's going to come back around, as it's a key point. And ultimately, we're going to have to onshore a lot of this ourselves at the cost of the environmental degradation it will cause.
And what they're essentially trying to do, because Lithium Americas had a loan from the Department of Energy trying to convert that. It's something, a playbook we've seen the Trump administration do. Today it's lithium, it's been rare earths in the past, it's been nuclear energy. If you had seen this coming, you would have made some serious money. Right. Is there sort of a speculative frenzy, maybe frenzy is too far of a word, but in this equity market to say, here are the companies that the U.S. Department of Energy or the Defense Department, Department of War, whatever it's called now, has loaned to. Maybe we should anticipate more of this to come.
100%. I myself was looking at all these DOE loans and thinking about how to convert and which one were very strategic things. So everyone on Wall Street's doing this. I think the morning show was joking that there's going to be an ETF for this pretty shortly. I agree 100% with this. This is early innings, and this is a longer-term plan that is signed on by actually both sides of the aisle, because the Democrats also realize this, and under Biden we were doing this, we're just structuring it differently. Now with tax cuts and with our deficits growing, we now need to have better revenue streams, a more diversified revenue stream, and this is what Trump's thinking about. He's trying to look at untraditional ways of money with tariffs and now with ownership and equity. And also with what we saw with NVIDIA, where they have to pay some sort of royalty to sell to China.
Yeah, we've talked about the potential for the Trump administration starting some kind of diversified sovereign wealth fund. It looks like that's really taking shape. Michael, I want to ask you about something different that we were just talking about with Caroline Hyde, and that is kind of the circularity of the AI landscape in terms of revenue generation, and the Bain report yesterday that there's going to be an $800 billion shortfall in revenue. What do you make of NVIDIA investing $100 billion in OpenAI, which then uses that money to buy GPUs from NVIDIA?
Yeah, it does act like kind of a bubble, right? It's almost like a Ponzi scheme in some ways when we step back. And obviously, we don't know yet where the AI productivity is going to end up falling as we go from training to inference and how we actually apply this to day-to-day life. And as I've said before in the show, we haven't seen that show up in the hard data. Now, we all have our own stories of how AI has improved our ability to do our jobs. The actual productivity of this country itself is yet to really materially reflect that. So is this worth it?
Or the return on investment.
Right. Is this worth it? How long? Are we talking about 10 years? Are we talking about 30 years? It's interesting Oracle does a longer-term bond. I think they have the right idea because ultimately there will be a pullback. There will be a question of, wait a minute.
But it's crazy people are willing to buy this thing, just given everything you're talking about.
I know, and I agree. I think, again, we're in a frenzy of state now, and we didn't, last week we talked about private credit. Private credit is itching to get into data warehouses and the data centers and also looking to be AI exposed as well. So we're not seeing this off the screen, this is happening, and we're not really seeing it as clearly. So this is across the board.
Also, we'd never call it a Ponzi scheme.
No,
and I would never
we have to be clear. You said almost like a Ponzi scheme, but it's not, obviously, and we're not saying that.
Michael, thank you so much for joining us. Michael Ball, and you can see all of his fantastic work at MLive Go on your terminal, a market strategist for the Bloomberg Markets Live team. Now, elsewhere, PayPal is selling $7 billion worth of buy now, pay later loans to Blue Owl over the next 2 years. It follows similar loan sales by rivals Affirm and Klarna as fintech leans on private credit to fund consumer lending. Let's get more with Bloomberg consumer finance reporter Paige Smith. And Paige, it speaks to the huge amount of appetite from these private credit players. What does it mean for PayPal? Is this a huge relief on their balance sheet to get this off the books?
Most definitely. You quite literally took the words out of my mouth.
Sorry,
Please, no. There's an enormous appetite for these sorts of loans on the private credit side of things. And, you know, as you also just said, PayPal is not the first fintech to be doing this. We've seen this with their rivals Klarna and Affirm, but Blue Owl has also been a pretty big player in this space. They have had deals with Pagaya Technologies, which is another fintech player. And yeah, I think that there's an enormous appetite, and we're likely to see more of these, I would say.
Well, and PayPal, I mean, this isn't what the company was set up for. The buy now, pay later thing leaves it with loans on its balance sheet, leaves it with assets on its balance sheet. And that's not the point of the company. They want to be asset light. So this is a way for them to get rid of those assets, and then they can use that cash and return it to shareholders the way that they did the last time they had a deal like this with KKR, right?
Exactly, and it's a similar playbook that other fintechs have deployed, where yes, it keeps their balance sheet very light, and the tie-up with KKR, I believe that was back in 2023, allowed them to allowed some share buybacks to occur, and it's again, a lot of other fintechs are doing sort of the same thing. There's quite an appetite to. I mean, there's also an enormous appetite on the consumer side of things, right, to originate more of these loans. And as the loans are originated, they need to go somewhere. And it seems like a heck of a lot of them are going to be going to Blue Owl at the moment.
All right. Paige, thanks so much. Paige Smith covers consumer finance for us, and obviously PayPal is a part of that, especially now with this new BNPL scheme. A check on what's going on in the markets right now. We have futures up across the board, 67.24 on S&P futures, so a gain of almost 0.2%, a little bit more than that on NASDAQ futures, and the small caps bringing up the rear there.
And Matt, just want a quick check on Marvell Technology 2. Shares are up just under 4% this morning, authorizing to buy back $5 billion worth of shares. Their past program was $2 billion, so that is a significant boost to that. Shares are down 32% year to date, so a deal on their end to buy back those shares.
All right, coming up, Jimmy Kimmel Live makes a comeback. The host returns to late night and makes an impassioned defense of free speech. That's next. And the Bloomberg Philanthropies Global Forum is set to kick off this hour here in New York City. The forum brings together leaders from public, private, and nonprofit sectors to address the world's most urgent challenges and opportunities. Because we have the UNGA here, because it's Climate Week in New York, we'll hear from Alphabet's CIO Ruth Porat and the UK Deputy Prime Minister David Lammy. This is Bloomberg. Let's getting out of high interest to look at what's making headlines around the world. NATO allies are split on how to handle repeated Russian airspace violations. Germany is urging caution, of course, warning against what it calls Putin's escalation trap. But President Trump says NATO should be ready to shoot down Russian aircraft, echoing Poland and the Baltic states. The rift comes after Russian jets entered Estonian airspace and drones breached Poland's and Romania's. With divisions widening, NATO's ability to present a united front is under pressure. Treasury Secretary Scott Bessent says the U.S. is negotiating a $20 billion swap line with Argentina and may buy its bonds. It's a show of support for President Milei after his meeting with President Trump on the sidelines of the UN General Assembly. On Fox News earlier today, Bessent also took aim at Fed Chair Jerome Powell, saying rates are too restrictive and should be cut by at least a full percentage point before the end of the year. Jimmy Kimmel returned to his late-night show last night after being pulled off the air on September 17th following a backlash over comments related to Charlie Kirk's assassination. He addressed the controversy that temporarily sidelined his show and set off a national debate over free speech.
I've had the opportunity to meet and spend time with comedians and talk show hosts from countries like Russia, countries in the Middle East, who tell me they would get thrown in prison for making fun of those in power, and worse than being thrown in prison. They know how lucky we are here. Our freedom to speak is what they admire most about this country.
Major broadcasters Sinclair and Nexstar say they won't air Kimmel for now. And President Trump blamed the United Nations for what he called a bad escalator and a bad teleprompter during his General Assembly visit. The escalator carrying him and the First Lady jolted to a stop, forcing them to climb the steps. UN officials say a U.S. videographer likely triggered a safety switch, but the White House is probing possible tampering. White House Press Secretary Caroline Leavitt addressed the controversy yesterday on Fox.
It doesn't look like a coincidence to me, and I know that we have people, including the United States Secret Service, who are looking into this to try to get to the bottom of it. And if we find that these were UN staffers who were purposefully trying to trip up, literally trip up, the President and the First Lady of the United States, well, there better be accountability for those people, and I will personally see to it.
The mishaps added fuel to Trump's sharp criticism of the U.S.
Although I'm sure he doesn't
Sorry, the UN, of the UN.
Of the UN.
Of course.
Which is in the U.S. I'm sure he doesn't have his own escalator guy, but you got to imagine, given all the speeches Trump gives, he's got to have his own teleprompter team. But he did blame the UN for that. He's got to have his own teleprompter guy.
Well, I mean, you've got to give him a little bit of credit, because when you're about to give a big speech in front of a group full of pretty important people, it would be, I think, nerve-wracking to have the teleprompter fail.
He was happy.
So
he said he could speak from the heart.
I understand. I understand a little bit of lashing out there. He obviously did a fantastic job of speaking from the heart. To me, it's more interesting that Caroline Leavitt is going to personally investigate UN personnel and see to it herself that if anyone did this on purpose, that those people face the consequences.
That poor camera operator who apparently allegedly accidentally hit a button and stopped it. Okay, coming up on the show, Morgan Stanley Investment Management's Andrew Slimmon says the stock market is overbought, but doesn't expect to pull back anytime soon. We get his view coming up next. The S&P 500 has scored 25 record closes on a 3-month rolling basis. It's a testament to strong momentum in stock market performance, but also maybe a warning sign that the winning streak is becoming stretched. Bloomberg found that a pullback once the market reaches the milestone of 25 records is often followed by further gains, though. Let's bring in Andrew Slimmon, Senior Portfolio Manager at Morgan Stanley Investment Management. Andrew, this is something that you've talked about, that yes, things are looking stretched, but that doesn't necessarily mean that it's going to reverse. So what do you do at this point? Do you just continue to ride the market to continue new highs?
Well, it depends. I guess it depends whether you're talking about new cash or existing cash. The existing cash, I certainly wouldn't be pulling out of the market as we go into the fourth quarter. I think one of the problems for the people that have been on the sidelines is we're just not getting that pullback. And I think a lot of people come on your show and say things like, oh, I expect a 3 to 5% pullback. Well, if everyone's expecting a 3 to 5% pullback, you know you ain't going to get that. And I suspect either you're going to have deeper pullback or no pullback, market continues higher. And I think we didn't get one this summer, and the market is typically a lot more vulnerable in the summer than it is in the fourth quarter. So look, I agree. The market's stretched. It's getting a little frothy. I just don't see, as we go into the year end, with enough investors, retail and professional, that are behind the ball, looking for opportunities. I just don't see the market pulling back.
How is everybody not fully invested at this point, Andrew? I seem to remember some regional Fed saying U.S. households, for example, are more overweight stocks than they've ever been, in the history of the universe since the Big Bang. So who has more money to deploy?
Well, first of all, they're overweight. That because the market's gone up more than the money market doesn't mean on an absolute basis investors still have a lot in the money market. I did a call with a financial advisor who had a client on last week saying, gosh darn it, I'm not getting my 5% risk-free anymore. We got to do something with the money. So as the Fed cuts rates, money markets are not going to be as attractive, and people will start to look for a home for that money. It's not all equities. It's going to go into other higher returning risk assets, but it's going to come out of the money market. So I just don't buy that argument, because I hear over and over, and I see the flows. As the Fed is cutting rates, money is coming into the market because the alternative short term. Back, Matt, in 2023, I think we had this conversation. I said, the market's down 25%. You got to get invested. In the number one pushback I got.
Hey, Andrew, we'll see if more of that investment comes. You're going to stick with us, but we have to get to break so we can get to the market open. That's Andrew Slimmon. As we head to another update after yesterday's decline, after back-to-back all-time records, the future's up 0.2%. Your opening bell coming up in just about 3 minutes' time.
Moments away from the start of trading on this Wednesday morning. This is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are slightly higher, 0.2 up on S&P futures and NASDAQ futures. Russell 2000 futures, little change. Down at the New York Stock Exchange, you've got, I believe that's Her Eminence Karen Keller Sutter ringing the opening bell. Of course, president of the Swiss Confederation there, because it's UNGA. You're going to have a lot of dignitaries over, and I hope she's wearing a Rolex, but didn't have to pay a 39% tariff to buy it. The Security National Financial Corporation ringing the opening bell. They do a lot of insurance work, and that's why their shares are down like 25% year to date. It's been a rough year for this team, but they're up over the last 5 years, so still not losing money over the longer term.
Well, Matt, with opening bell, I've got my eye on Alibaba because it is helping to lift the entirety of the tech sector today. You're looking at the ADRs trading around a 4-year high, up 8%. They revealed plans to ramp up their AI spending past an original $50 billion plus target over the next 3 years. They say they need to keep up because spending is going to exceed $4 trillion in total. They also plan to launch their first data centers in Brazil, France, and the Netherlands in the coming year, Matt.
And the Trump administration is seeking an equity stake in Lithium Americas as it renegotiates the terms of a $2.3 billion energy department loan. By the way, that loan by itself is like 3 times the size of Lithium America's market cap. Yesterday, before this massive rise. You can see 69% gain in the shares after Lithium said it offered a 5 to 10% stake via no-cost warrants. And Alphabet CIO Ruth Porat is speaking with our own Francine Lacroix at the Bloomberg Philanthropies Global Forum. Let's listen in.
Analysis and where you're going. With the more we use AI, of course, the more energy it needs. How do you look at energy demand and infrastructure needs?
I like the way you frame that because the upside from AI is profound and we can only access it if we actually have the energy to power it. So it's important to keep those as 2 sides of the same equation. And clearly in the U.S. and in other places, U.S., we've underinvested in the grid for quite some time. And so we need to catch up. I think what's important is there are both short-term and long-term solutions that are right in front of us. Probably one of the most important, but it's longer term, is continuing to make advancements in things like nuclear energy, advanced energy solutions. And this is clearly a priority for the administration. We very much agree with it. We think it's imperative that nuclear energy is a part of the energy mix. At Google, as an example, we're the first corporate purchaser for an SMR offtake from Kairos. We've invested in fusion. But this is critical. And when you look at what China's doing, they've been investing in nuclear for quite some time. They have about 30 gigawatts of nuclear in construction, another 200 gigawatts in development. The United States needs to avail itself of that, and I'm pleased the administration is very focused on how to fast track it. Near term, there's some really important solutions. And I think what is important, again, if we execute against these things that are right in front of us, we can increase capacity rapidly. We need it now. This is not a 2030 need, it's a now need. We can do it and enhance affordability across the country, which is clearly imperative, generate jobs and decarbonize the grid. And the two best examples are, number one, when you look across the United States, we have underinvested in transmission lines. The reality is there's about 2,500 gigawatts of capacity in development that is waiting to get on the grid, a staggering number, but we need the transmission lines to get it on the grid. To date, it takes about 7 years in the US to build these transition lines. With fast-tracking permitting and other work with states, you can cut that time in half, and some would say even more than that, which is a meaningful unlock. What's potent about that is that it also creates jobs, a meaningful number of jobs, and importantly, the vast majority of that is clean energy. So by getting it on the grid, you're decarbonizing the grid. The second area that I think is really exciting is actually modernizing the grid. There's another 100 gigawatts in the United States that the Department of Energy has estimated could be unlocked if the grid is modernized, applying what's called grid-enhancing technologies, something like conductors online so that you can get more capacity through. And again, that creates jobs. It unlocks assets that are here that are being underutilized because they have not been modernized. So I think that, again, there are a number of different solutions at Google. We're working on a whole host of others to improve energy efficiency in chips and in models, delivery, across the board. We can, if resolute, and we take each one of the available assets here and execute against them, we can unlock the energy.
Ruth, is that part of the whole package in this AI race? So Google spent the last, quickly actually caught up with OpenAI in the last 2 years. How are US companies doing compared to China, for example? And is the energy complex part of that race?
So energy unequivocally is important. I think the US is ahead in models and in chips and continues to be. I think what's very important is China, as we saw with DeepSeek, is a very active innovator and working, assiduously on AI and the application of AI. So I think there are three critical elements really for the US and the West. Number one is you need to have the energy infrastructure to deliver the upside. And China is focused there. It's not just nuclear, it's also in solar. They're building out whatever they can to have that long-term infrastructure needed to deliver the upside from AI. We have tremendous resources in this country. If we avail ourselves of all of them, we can win in this regard. The second is the application. So the upside only comes with each one of us actually unlocking the upside from this, as I've already talked about. Anecdotally, we're hearing China is actually very focused on the application of AI across industry. It's imperative we each do that. It puts us in a better, each company, each country in a better competitive position. And then I think very importantly, it is about embracing working closely with our allies. And so one of the things I'm very proud of is the work we're doing around the globe. Every head of state with whom I meet says, we want to be a part of the digital transformation. We see not just the economic upside, but we can address healthcare requirements. My oncologist, I loved a line he said to me. He said, the only way to democratize healthcare is with AI, because then you actually have a partner to anyone around the world who can deliver this. We're doing amazing work, I think, for example, in Africa on maternal care. There are so many areas where it is available to us now. So they're saying we must be a part of this. That requires, as we look at it at Google, engaging to unlock products and services, which means investing in technical infrastructure, and very importantly, skilling people so that they have the capabilities to actually evolve as the jobs evolve. I view that as a critical triangle, the services, the infrastructure, and the training. And I'm intrigued wherever I go how often I'm asked for, first, help me with the training. We just actually announced, which will be talked about here this week, a very, I think, exciting effort across Africa where we're building out subsea cables to ensure connectivity, resilience, and security across the continent, and really with 4 hubs, as well as incremental AI digital skilling. And this is really important because a third of the globe still isn't connected. And if you're not connected, you're not going to get the upside from what this offers.
Ruth, we're almost out of time, but actually an important question on responsible AI deployment. What does that look like to you? What are some of the questions that the leaders here need to ask?
All right, that's our own Francine Lacroix speaking with Ruth Porat. Of course, she is the Chief Investment Officer at Alphabet. They are at the Bloomberg Philanthropies Global Forum here in New York, and everyone is hanging on every word coming out of the C-suites from these hyperscalers. So if you want to continue listening to Francine and Ruth, you can type LIVE GO on your terminal, live GO on the terminal to get more of this Ruth Porat conversation. I want to get back to Andrew Slimmon right now, Senior Portfolio Manager at Morgan Stanley Investment Management. And Andrew, while we're on the subject of AI, on the one hand, it looks like it still has phenomenal pace to grow, a lot of these businesses, and not massive PEs. If you look at NVIDIA, for example, trading at only 4 times forward earnings. On the other hand, there has been a lot of criticism about what looks like a circular economy that's developing, where they're all kind of just passing the same money around inside the Stargate environment. What do you think about that criticism?
Well, I think vendor financing is, it raised the flag, but it's not necessarily evil. I think the bigger issue, Matt, is the market right now is focused on revenue growth, right? But this reminds me of the early stages of the internet rollout, where we rewarded the carriers who were going to carry all this information. But what happened ultimately is they had to raise a lot of money to finance that, and the market moved from revenue growth to return on invested capital, return. And that's when the market pivoted away from the carriers. So I think that's the danger right now, is who is generating the true returns that's not debt financed. As an investor, I think that's the danger, because I think the same thing will happen eventually, is the market will reward those who are truly generating a return versus the debt financing that's fueling revenue growth. That's where I feel like we're in right now, that stage.
Speaking of huge amounts of debt financing, Andrew, I got to believe on your mind is the Oracle bond sale, looking to raise $15 billion. Part of that is a 40-year sale, which is incredibly rare and maybe really tricky for a company where who knows what things will look like in 40 years. But the spread is incredibly tight. The yield is something like 6%. What does it tell you that this type of company is able to go to market and raise debt that looks so favorable to them?
Yeah, I'm not a bond expert. The credit spreads are tight right now. So there's a lot of liquidity in the bond market, which goes back to our original conversation, was as rates, short-term rates come down, money needs to find a new home. It's going to go into the equity market, but it's also going to go into the bond market. And so bond managers are going to see inflows just like equity products. And I think that they need to invest. So, spreads are tight right now. It doesn't surprise me.
All right, Andrew, great to get your commentary. Really appreciate it. Andrew Slimmon there of Morgan Stanley Investment Management. He manages the global concentrated as well as the U.S. core and global core mutual funds over at Morgan Stanley. Coming up, Alibaba's CEO sees Capex topping $4 trillion with a T, $4 trillion by 2030. That's twice what Bain said yesterday about AI revenue. We'll discuss with Bloomberg Intelligence's Mandeep Singh. This is Bloomberg Open Interest.
Let's get you some top calls, some of the analyst action that we're watching this morning. First up, UBS upgrades GM to a buy. It hikes its price target to nearly 45% to a street high of $81. They see GM's margins rebounding in North America. Those shares up more than 2% this morning. Next up, Amazon, that gets an upgrade to a buy at Wells Fargo with greater conviction in the company's Amazon Web Services division. The analysts there see AWS achieving 22% revenue growth next year. Those shares up about 0.75%. Finally, GI Securities raises Micron to a buy after its strong quarter. Citi says that it expects strong AI demand to continue, but those shares down 2% after nearly doubling so far this year, Matt.
Wow, that is interesting because they were up after the bell, after those earnings came out, after Micron said that revenue was going to grow double digits sequentially and margins were well over 50%. So looked like all good news. On top of Micron earnings, we also have China's Alibaba news today. They announced a boost to their spending on data centers around the world. Let's discuss the AI trade with Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh, saying, I think that Alibaba said more than $50 billion. That was the target, and now they're going to overshoot that. We continue to get these kind of numbers. Are they real? Are these numbers real?
I mean, they're real because it all started with Oracle giving that guide of backlog, and underpinning that was their deal with OpenAI, the $300 billion deal. And now, Jensen and NVIDIA investing $100 billion in OpenAI. and they talked about adding up to 10 gigawatts of AI data center capacity.
Which is how much? Put that into perspective. How much is 10 gigawatts?
So based on our framework, it's about $300 billion that's going to take to add 10 gigawatts, roughly 200.
But what would that power? Would that power Columbus, Ohio?
It will. And look, at the end of the day, what we know right now is AI compute is somewhere close to, 4 to 5 gigawatts. So we're talking about really a substantial expansion when it comes to the AI compute requirements. And so from that perspective, that $3 to $4 trillion number that everyone keeps bringing up does make sense. Now, whether it's going to happen in a straight line, it's never happened before, so I think there'll still be doubts around the buildup. But clearly, the financing is showing up, and companies are committing to that sort of a build-out, and they feel the demand is there.
Well, the Alibaba rally just underscores that it doesn't matter whether it's an American AI company or a Chinese AI company. If you announce you're going to spend more, you're going to get rewarded. And it's kind of crazy because it's essentially saying we're going to kill our free cash flow at the behest of spending more. When does that end? When do investors say, we're not going to keep rewarding you for these billions and hundreds of billions that you're spending?
So look at it this year. There's about a $250 billion investment in building AI compute. The revenue is close to like 30 to 35 billion if you add up OpenAI, Anthropic, and all the cloud providers, Microsoft and Google, how much revenue they're generating specifically from AI. So there is that gap. But the hope is with the rollout of AI agents, the inferencing market is going to be the bigger market, and inferencing translates directly into revenue. Whereas you had to spend upfront on training because that's your intelligence layer. You had to develop the intelligence first. Now you're deploying it. So the revenue should accelerate for all the cloud providers. And that's the hope. I think if that doesn't translate, that's where you're going to see a hyperscaler say, oh, we are pulling back on our Capex plans because we're just not seeing that kind of ROI.
By the way, I asked ChatGPT about 10 gigawatts. That would power roughly 8 million homes, about 8.3 million homes. And ChatGPT says that would power New York City in peak summer. Maybe would need a little bit more because all the ACs are running. But
there's something incredibly meta about you using literally that exact power to ask ChatGPT about the power of it.
I'm getting a note from a viewer. And by the way, viewers can always shoot me an IB. Like, I'm listening here. So, MT Miller at Bloomberg.net. A buddy of mine saying, is AI the next .com bust? Seems like a Ponzi scheme. And this is a question that we've been hearing more and more over the last couple of days.
I mean, look, a lot of this compute is fungible. Last night, Micron called out, traditional server market is getting a boost because of the rollout of AI agents. Now, who would have expected that? Everyone thought it's getting substituted, traditional servers by AI servers. That's not the case. You're getting that boost to traditional servers. So to my mind, if we need to, do more of our work digitally and these assistants are helpful in terms of doing the work, right now we are not cost optimizing for compute. That's not the case. There's so much gains just by running the infrastructure efficiently. So if the ROI is there in terms of productivity benefits, then I think the compute is fungible enough that it'll be used somewhat. That's what happened with the fiber build out. You started using it for YouTube consumption. Nobody saw that use case initially, but eventually it was all video consumption.
All right, Mandeep, thank you so much for joining us. Mandeep Singh of Bloomberg Intelligence. Coming up, Lithium America soars after the Trump administration looks to buy a 10% stake. That's next. The U.S. is seeking an equity stake in Lithium Americas as it negotiates a $2.3 billion loan originally from the Department of Energy. Bloomberg's Simon Casey covers commodities and joins us now. Simon, what is the government's intention here? Because it's my understanding that this loan was something Lithium Americas was already trying to renegotiate. Is this a lifeline for the company?
Well, first of all, it badly needs this loan. This is almost $2.5 billion. Without this loan, it's very unclear if this project can proceed. So they desperately need that money. Crucial context, lithium market is going through a bit of a decline at the moment. It's oversupplied, prices are at rock bottom. So there are heightened risks involved. And the government's position, as far as we understand, is we need to see some guarantees here, and they're using leverage to maybe get a stake. In return, Lithium Americas is going to be finally able to access this loan.
But why only, I don't understand why only a 5 to 10% stake. So yesterday when this news first broke, I was on the close with Romain Bostic and we looked up the market cap and it was far less than $800 million. Right. If they want a $2.3 billion loan, I feel like the U.S. could just buy the company.
Yeah, but why would they want to do that?
Because it's worth nothing.
It's a mining development company, so it has no cash flow.
Right.
There are hundreds of these
But this is a
companies.
national security thing, right? We need to have these kind of minerals. Otherwise, China can continue to hold us hostage.
If this mine is built, if it operates, if it eventually makes a profit and does so for years to come, this company could potentially be worth billions, if not tens of billions of dollars. So to answer your question, a 10% of a company worth tens of billions of dollars that's still publicly traded. Also, General Motors is a joint venture partner in the actual project. So, yeah, I think it's in line with what we've seen the government do. Of course, they took a stake in Intel. They've taken a stake in MP Materials, which is this rare earth materials company in the US, the only producer of rare earths in the US. Remember as well, the US government took a golden share in US Steel at the last moment to get that Nippon Steel merger completed. So maybe there's more to come here, but there seems to be a clear strategy of taking these minority stakes in strategically important companies in multiple industries.
You could wrap them all up and create a sovereign
exactly
wealth fund. Simon, great having you on the program. Thanks for joining us. Simon Casey, they are talking to us about the administration potentially buying or acquiring a 5 to 10% stake in Lithium Americas. The shares now up 93%. Coming up in the next hour, we'll bring you a special conversation with the Deputy Prime Minister of the United Kingdom, David Lammy, live from the Bloomberg Philanthropies Global Forum. We're also going to hear from Banrion's Shana Sissel and OneNYC's chair on the mayoral race. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Danny Berger. Stocks lose on to the gains that they were posting in the future session, now just ever so slightly dipping into the red.
Coming up, the seemingly unstoppable rally. The S&P 500 has gone 107 sessions without a drop. of at least 2%, and that is its longest stretch since July of 2024.
And as low crop prices and trade tariffs squeeze the agricultural sector, we're going to hear from the CEO of one of the world's biggest farm machinery makers.
Plus, a lending hand. Treasury Secretary Scott Bessent says the U.S. is discussing a $20 billion swap line with Argentina and may buy Argentinian bonds, which doesn't always turn out to be a great investment.
No, there's been certainly a history of that. Matt, some breaking economic data coming in much better than expected. New home sales rise 800,000, an annual rate. The estimate had been for 650,000. That also means that the sales percentage change month over month is 20.5%. The expectation had actually been a decline of 0.3%. So it is a stronger number, but not a roaring market. It does underscore the fact that mortgages, Matt, have come in. The mortgage rate looks to be around the lowest since the start of the year. But we've had a Fed that's cut 125 basis points over the past year, and that hasn't really done that much to juice this housing market.
Yeah, no, because the mortgage rates come down, but it's still high. We're still talking about 6% plus mortgages, and affordability is off the charts. I mean, we've talked about this before. If you go back to the 70s, the 80s, the 90s, people were paying 3 times, maybe 4 times average income for a home. Now we're talking about 5, 6, 7 times annual income to buy a home. So it's just a lot more expensive these days, and that makes it very difficult.
At least this is a sign of life, but even so, the Fed for a very long time had been depending on the housing market to boost the economy as they cut rates. What does it mean that this transmission line doesn't necessarily exist as it once did?
And we have seen a drop in building permits. This morning that came out, and we saw a drop of 2.3%. Okay, previously it was worse. We were down 3.7% in the previous reading, but we're not seeing any huge supply. And that's the problem. You would expect when price rises that supply would rise, but because of mortgage rates, I think builders are a little bit worried. And uncertainty obviously doesn't help either.
Yeah, but even so, who cares? Because stocks are at a record high. And we spoke to Morgan Stanley's Andrew Slimmon on just that in his market outlook earlier.
One of the problems for the people that have been on the sidelines is we're just not getting that pullback. And I think a lot of people come on your show and say things like, oh, I expect a 3 to 5% pullback. Well, if everyone's expecting a 3 to 5% pullback, you know you ain't going to get that. And I suspect either you're going to have deeper pullback or no pullback, market continues higher. And I think we didn't get one this summer, and the market is typically a lot more vulnerable in the summer than it is in the fourth quarter.
Joining us now is Shana Sissel, Banrion Capital Management founder and CEO. And Shana, thanks for joining us. What do you think about this rally? We haven't seen a decent pullback, and we also don't talk to many people who are bearish on this show. I mean, if everybody is bullish, that's a bearish sign in itself.
It is. And I think you have to look at underneath the market. So we have actually seen margin compression and earning and some sell-off in segments of the market. But you got to remember that the market was being driven almost exclusively by tech stocks for a very long time. Those stocks started to come in. We have seen weakness in those names, and we've actually seen the rest of the market kind of catch up. So you got to remember what's been driving the market all along and how those stocks have performed versus the rest of the market. And actually, you could argue that there has been some adjustments and some margin compression on that end, while we've seen margins expand with the rest of the constituents of the S&P 500.
Shana, Powell was asked yesterday about just this, how much emphasis he and his colleagues put on higher market prices and whether they have a higher tolerance for it. His answer was, yes, we do look at overall financial conditions. But you're right, by many measures, for example, equity prices are fairly highly valued. Shana, did you take that as a warning or just stating the fact and Powell won't do much about record high equity prices?
Well, it's just stating a fact. Powell shouldn't do anything about record high equity prices. That's not the Fed's mandate. The Fed's mandate is inflation, and labor markets. And those are the two things they should be and are paying attention to. Now, you could argue record high equity prices could lead to accelerations in inflation, and he addressed that in his comments. So he did talk about how inflation has ticked up year over year. We have seen an acceleration in inflation, but he noted that that was due to what he felt was one-time tariff impacts, not necessarily equity market impacts. So, you know, ultimately the Fed's mandate has nothing to do with the equity markets, but they do pay close attention to it because it can have impacts on their two aspects of their mandate.
Well, and it tells you a lot about financial conditions, right? I mean, if equity markets are high, if spreads are tight, if growth is decent, then your rate's really not restrictive. How does anybody see this rate as restrictive?
I'm not really sure. And to be honest, I think it's just because they're working from a baseline of, you know, a 15-year period where we were at relatively zero interest rates. You know, you were talking about mortgage rates being at 6%. That's like a historically normal, if not on the lower end of history of what mortgage rates are. And we're just used to zero interest rate policy and not necessarily taking into consideration that where the Fed sits today is relatively on the lower end of the rate scale. If you look back historically at where rates have been, where inflation has been, and like mortgage rates as well. All of these things I think are just a result of generation of individuals who are used to zero interest rate policy and not really understanding what truly restrictive policy is.
Well, Shana, for what it's worth, the data Matt and I were just talking about was the best rate for new home sales since 2022 as mortgage rates have come in. That stands in contrast, for example, Governor Micron yesterday or earlier this week saying that the true neutral rate was somewhere around 0%, and that is what the Fed should be striving for. As we get towards the end of Jerome Powell's term as Fed chair, do you expect to have a Fed chair, to have others put in by Trump that take us in that direction, and do you trade based on that?
Well, I hope that's not the case because zero interest rate policy is not the best policy. If you're at zero interest rates and something goes wrong, what do? You have to start using the balance sheet again because you can't have negative interest rates. And so you want to have a neutral rate that is roughly about inflation or maybe 1% higher. That would be neutral. It is not zero. And anyone who suggests that is really just talking from a political lens and wanting to have, you know, really relaxed conditions for capital markets as well as for consumers. It's not actually healthy to have a zero interest rate environment. So it would be concerning if the next appointed chairman of the Fed becomes more politically motivated. And the comments coming from Governor Barron is obviously somebody who was appointed or nominated by the president, who works for the president, and he's kind of speaking for the president, if you think about it. But zero interest rates is not a good or a healthy condition for neutral rates. It should be about inflation, maybe a percentage higher.
Yeah, I guess if 0% was the true neutral rate, then we'd be insanely restrictive right now and things would look a little bit different. Shana, thank you so much for joining us. Shana Sissel of Banrion Capital Management. Let's get a quick check on markets this morning because you are looking at stocks struggling to find any sense of direction this morning. We're basically flat on the S&P 500. The NASDAQ 100 also basically flat. 10-year yields, they are ticking higher after that new home sales data that exceeded expectations. A gain of 20%. The expectation was a decline of 0.3%, but otherwise it is a calendar that's really void of data. Most of the Fed speak has already happened, so not a lot of catalyst this morning, Matt.
No, not a lot. And as a result, you see this flatness really across markets. I wonder, you know what? I'm going to look at gold and see if we have yet another record high.
Yeah, because we got one yesterday.
Every day, it seems like. Actually, spot gold is down right now, just about 0.2%, but at $3,756 a troy ounce. It is hovering around very high levels. Let's take a look at some of the single stocks moving at this hour. Baba is one that we've been talking about all morning. Chinese company, U.S. ADRs surging after the company revealed plans to ramp up AI spending past an original $50 billion target. It aims to launch its first data centers in Brazil, France, and the Netherlands in the coming year. And Alibaba says this data center build-out globally is going to be a $4 trillion Capex.
I mean, that's huge, but considering the pace of spending that's been happening, that's not unfathomable.
It's still gigantic.
It is huge. And it gets to this thing of crowding out. With so much investing happening into AI, what happens to other types of investment? All the money is just being funneled there. Micron, speaking of AI, they had their earnings yesterday. Matt, you flagged this at the beginning of the trading session. It's interesting to see these shares fall because they were much higher in the pre-market session. They gave a strong outlook, strong AI-related demand, but expectations were really high. Analysts noted this, but all you have to do is look at the performance year to date. It has nearly doubled. So, yeah, the bar was high.
Yeah, I think, from my days of writing about stocks as a print reporter, we weren't really allowed to say profit-taking, but this may be some profit-taking, right? If you've made 90% year-to-date, if you've made 237%, I mean, over the past 3 years alone, the stock is up 230%.
Why is saying profit-taking bad?
Well, because it was just a lame reason.
Cliche.
Yeah, taking profit.
Fair enough.
In any case, you've done well in this stock, so buy the rumor, sell the news is kind of what we would say back at Tucker Anthony.
Which is also a cliche, by the way.
Yes.
But that's okay. Another big mover this morning, 89.5%. Lithium Americas, this is the report that the Trump administration is seeking an equity stake in the company as it negotiates terms of a $2.3 billion loan, Matt.
Coming up, New York City mayoral candidate Zoran Mamdani drawing investors to advise him. We'll speak with the head of the committee behind a new business council next. This is Bloomberg. The UK's Deputy Prime Minister David Lammy sitting down right now with Bloomberg's editor-in-chief John Micklethwaite at the Bloomberg Philanthropies Global Forum. Let's listen in.
Well, it first reared its head in sort of 2014-15, and William Hague, who was Foreign Secretary at the time, stood against it. And in a sense, the UK government, alongside our European and other Western allies, continue to say that this is not acceptable. So it's for that reason that I think we arrived in a place where, alongside 147 other countries, the time has come to recognize a Palestinian state. I think all of us recognize that this is not going to happen tomorrow, but it is to say that hope is important and that Palestinian statehood is a just cause.
Obviously an area of some disagreement with the administration, but I'm just going to ask you about Donald Trump's speech yesterday. I mean, it strikes me, he has not... You had him across to Windsor. You invited him to Windsor, you wined him, you dined him, the King was there, and then he's come out describing London Mayor Sadiq Khan as terrible, that we're running Sharia law in London, that the energy policies are suicidal. Is that what you normally expect from a guest when they come to stay?
Well, to be fair, I think we had a really...
I'm being very fair.
I think we had a really successful state visit. The truth is, the Prime Minister, Keir Starmer, and I and the team put a lot of effort into our relationship with the new administration. We were in Trump Tower back in September of 2024, before Donald Trump won the next election, and Keir Starmer had sent me to the US a few months earlier to try and form a judgment as to who might win the US election. And I took the view that the Republicans were indeed on course to win, and that turned out to be right. Look, just to step back a bit, the special relationship is hugely important between the United States and the UK and our Five Eyes allies. We have the biggest intelligence capability in the world, and it keeps a lot of us safe. Our military partnership is key as well. And then what you saw come out of the state visit is a tech partnership, £250 billion worth of investment. And particularly, I think, in AI. Yesterday, I was in New York first quantum computer, OQS, hugely important that we are partnering with our fantastic universities, our fantastic innovation, our fantastic enterprise, owning that future, given some of the capability exists in other parts of the world where they would have a different approach, I suspect. So for all of those reasons, the UK and the United States, the special relationship, I think, is in very, very good health. Now, look, of course, there are going to be areas where we disagree. Harold Wilson disagreed with Nixon, I think, on the Vietnam War. But actually, when you step back, and I looked at the speech yesterday, America First was very prominent, of course, but it's not America only. I think also attitudes to migration, of course, were very dominant. But the truth is, in every Western democracy across the Western world, there are two issues that will govern both the elections we've had since 2008 and will govern future elections. They are cost of living and migration. And whether you are a progressive party like my own or a more conservative party, as is the case here in the United States, you have to have answers to those two questions, or I'm afraid your electorate aren't going to vote for you.
Do you think those are questions at the moment the right is answering better? And the other one many people would throw in there as well as climate change. You know, yesterday Trump called it, I think, a complete fraud or something like that. Is that these all seem to be areas where parties on the right, you look at reform in Britain, people are picking up, they're getting traction in a way that more centrist parties like your own are finding it harder.
Again, let's step back. So this is a story that has been playing since 2008. It's still current, and my sense is it's still got some time to run, because working people in Western democracies feel deeply unsettled. And it means that electorates are very volatile. They are swinging violently back and forth. That theme has continued. To your question, do the right sort of dominate that? I don't think so. Let me tell you why. Let's go back to Australia. They had a voice referendum on Indigenous rights, did not go well. The Labour in Australia started to sink back. They're about 10 points behind in the polls. They went on to win.
That is the UK Deputy Prime Minister, David Lammy, speaking with Bloomberg's editor-in-chief, John Micklethwaite, of the Bloomberg Philanthropies Global Forum. You can watch that full conversation on your terminal. Live Go is where you want to head. Well, from UK politics to New York City politics. Members of the business community are forming an advisory group to guide mayoral candidate Zohran Mamdani if he wins the election in November. OneNYC, an independent expenditure committee backing Mamdani, is organizing that council, and OneNYC chair Yasser Salem joins us now. Thank you so much. Really wonderful to have you in the studio this morning. And look, it's my understanding you formed this council, but you've been having lots of conversations with business leaders. How much of those conversations are just because these business leaders realize that Mamdani is likely to be the mayoral candidate versus actually getting behind him?
You know, I always ask myself when I'm having conversations, what part of the perspective am I getting, or the energy I'm getting back, is ideological? What part of it is principled? What part of it is pragmatic? New Yorkers are, Danny, very pragmatic people. And in that respect, this is the right opportunity now to build partnership, to share perspectives, and to come to the table to co-create solutions.
So what are the things that OneNYC or the business leaders that you've talked to want from Mamdani? Because we know the concerns, we know the fears, but what are the asks?
I think the main sort of framing is, will he be an effective mayor of New York City? Business leaders are concerned about things that all of us are concerned about, actually. They're concerned about the supply of affordable housing. They're concerned about New York City improving its public safety. There's plenty of space with what Zohran has been focused on and what business leaders want. I
think it's fair to say that there are lots of things that universally people can get behind. Things like pre-K and free childcare. The one sticking point for the business community continues to center around housing and a rental freeze, the concern that it means maintenance falls by the wayside and it impairs supply. How flexible would a Mayor Mamdani be to actually not implement that if the business community feedback is one that this is something we can't get behind?
I think that, number one, Mr. Mamdani has been clear that increasing supply of affordable housing is a top priority. He wants to increase it much more so than prior administrations have. And affordable housing is what is important to business leaders. Many business leaders tell me they're not able to retain talent because New York City rent has just gone through the roof. So there's plenty of opportunities to talk about. I wouldn't call it deregulation, I'd call it smart regulation. Let's really understand what are the bottlenecks preventing more supply from getting on the market as soon as possible, and let's help real estate investors and developers make that happen. And Mr. Mamdani has been very clear that is a top priority.
So you're saying there are other ways to do that than simply putting a cap on rent increases, or that he can find other ways to increase supply so that that cap isn't hit?
Yeah, I think that absolutely the win-win situation would be that if we could wave a magic wand, Matt, and have tremendous amount of supply on the market, that would be the win-win scenario. In the short term, economically, that's not possible. We have to get to that point where supply is increasing sufficiently to bring down rents. And so in the short term, when we're all in agreement as business leaders that our people, the people that we employ, not low-income folks only, middle income, right? They're having a hard time affording rent in New York. It has to be addressed, or we're going to continue losing talent.
Yeah, I think high-income people are having a hard time affording rent in New York.
Yeah, no, it's true.
True.
It is across the board, and I think a lot of people would look to de Blasio, who this was a big part of his platform too, and he froze rents more than one time, but homelessness actually got worse underneath him. What is Mamdani going to do differently than past mayors?
And crime, right?
True.
You go into a CVS or a Duane Reade right now, everything's locked up because they're so afraid of theft.
That's right.
Yeah.
So what is the message to say that this is different than administrations past?
I think Mr. Mamdani has consistently looked at the root causes of problems as opposed to addressing them with a Band-Aid on the surface. So his whole public safety plan that incorporates what an officer should be doing and what other specialties should be doing, like mental health workers, right? When we start looking at the problem at the root cause and bringing forward solutions that address those root causes, we will see a safer and more affordable New York City.
Yasser, I look forward to more conversations with you. Thanks so much for joining us. Yasser Salem is the chair of OneNYC, and they're putting together a business council that will advise Zoran Mamdani. Let's get a check right now on what's going on in the markets. We're looking at pretty flat equity indexes here, S&P and NASDAQ unchanged. We do see a rise in the 10-year yield. Yesterday, it came down after Jay Powell's speech. When we come back, we're going to talk about U.S. farmers. They've slowed down their equipment purchases, and we are lucky enough to have the CEO of Marx, the CEO of CNH, Gerrit Marx. It is one of the biggest makers of farm machinery, of tractors in the world. So great to get into that discussion. This is Bloomberg Open Interest. One of the world's largest farming equipment makers senses a slowdown ahead. CNH says net sales in its agricultural segment set to drop 12 to 20% year over year. A sign struggling U.S. farmers are turning to the second-hand market for equipment if they're buying it all. Joining us now to talk about this is Gerrit Marx. He is the CEO of CNH, and you make more tractors than almost anybody else in the world. At a time when I guess you've got twin threats right now. Number one, we've reported recently that the Chinese haven't bought any soybeans from U.S. farmers, which is a concern. Number two, rates are high, and I have to imagine a lot of these purchases are financed. Is that right?
That's right. I mean, we are very much looking forward to some kind of settlement and trade negotiations between China and the United States, particularly around soybeans. But there's also an open negotiation with India, where soybeans might or should be also part of. I think once this settles, we'll see much, much clearer when it comes to equipment sales in North America, but also in South America, which is currently the main source for China's soybeans as we speak. And hence, we need to see how the whole global economy and the global trade shapes up after those deals are made. So that is clearly one large source of insecurity and uncertainty. Rates is another point, but I think rates in itself, when they are cut, they help, but they are not a trigger to boost sales. What needs to happen is that production costs are below sales prices for major commodities, and that is not the case at this moment. We are at an 18-year low for soybeans and for corn, and with these lows, farmers do not earn any money. So even the accelerated depreciation that is usually very helpful at a year-end to boost equipment sales will not drive equipment sales necessarily, because you first need to have some operating profit to offset with machine purchases. So there's still a bit of sit and wait and see what's going to happen on the global trade front.
It's those stresses that have Washington, D.C., representatives, even the White House alike, calling for or contemplating aid. The representative from Arkansas, Republican Rick Crawford, had said earlier this month that U.S. farmers, use the word, will face financial calamity without extra aid soon. Is he right? Is that the level of risk we're talking about?
That is about right. I mean, when you look at the farmers' income, projected farmers' income, 2025 over 2024, there's a 30% increase, but that is predominantly because of the disaster relief funds handed to the farmers. This is not a profit that the farmers make from producing crop and selling crop in the open market. So I think handing support to farmers is a very necessary thing, and it helps to keep it going, but it is not a long-term solution for the sector.
Where do you make your gear? We're looking at, I guess, New Holland tractors there rolling down the field, and obviously the tariffs have been a big issue, but I know a lot of your production is here, and you're headed right now to Pennsylvania to talk to some of your employees.
That's right. I'm just stopping over here in New York, and I'm heading out to Pennsylvania to join the Next in Tech event, which is an event that we host with our engineers and our customers to show them the next level of technology to come. We're going to live demonstrate that in the fields. We need to see how the weather shapes up. I just got the news that the weather isn't too good, but we'll see how this goes. Because, weather in the end, also for our farmers, weather is the largest, by far the largest unknown, let's say, element in their equation to make money. So precision is very relevant to offset that. I mean, predicting weather, et cetera, helps them. But weather in itself is the biggest impact on a farmer's balance sheet and its farmers' profits when it comes to delivering yield.
But I know you have production facilities in Wisconsin, and the Dakotas, in Austria and Italy, in Belgium. So had the tariffs hit you? Do they hurt? Because you still have to buy steel, even if you make everything here. That you sell.
Of course. I mean, the tariffs came sudden. In some instances, in some others, they were kind of pre-announced. So in the first step, they do increase cost, I mean, no doubt. But it also triggers behaviors and counteractions. So we are reviewing, obviously, our supply base. We are reviewing our manufacturing footprint to revise our global setup in response to these tariffs. But first of all, we need to know which tariffs are here to last, which ones are just a temporary incident in order to negotiate a better deal, and what is sustainable in terms of economic burden from those tariffs. But over time, it will change the supply chain. It will change how and where we make our machines.
Well, you've worked in heavy industry basically for all of your career. Before this, you were with Iveco selling commercial vehicles. Before that, with Bain, working on the European leadership team. This moment in time, how much more difficult is it to be a European company selling this big machinery versus than it has been in years past?
Well, look, I mean, we are headquartered in Chicago. We are New York listed, and we're considering ourselves a US-based but global acting company. I consider this very moment as a pretty exciting opportunity for us to reshape our product lineup, to reshape our footprint, to reshape our entire practice in the industry. And we will see who's the most agile player leaning into this as a chance to transform to the better. So, I mean, change is happening every time, and change is the nature of any business. And with these moments, for us, this is just another moment of reinventing ourselves in our global footprint and our exposure to tariffs.
By the way, I know we're going to have a conversation about sustainability in the next block. If any company has an interest in sustainability, it's got to be yours.
Oh, yeah.
Right? Does that hold through this Trump era?
Oh, very much so. I mean, what Secretary Kennedy with Make America Healthy Again and his focus on agriculture wants to push, we very much help his administration to focus on the right areas in order to create soil health, to strengthen soil health, which ultimately does not only impact in a positive way the yield of the fields, but also increases the health and the quality of the food being produced in those fields. That is for us sustainability. Sustainable food is healthy food, and that is what our machines with increasing levels of technology are going to produce today and also in the future. So we are very much, continuing our path and even accelerating, particularly around the area of soil health.
Hey, Gerrit, this has been so interesting. Thank you so much for joining us. That is Gerrit Marx of CNH. Safe travels to Pennsylvania after this. Hopefully the weather keeps up for you.
Thank you very much.
Coming up on the show, President Trump takes aim at climate initiatives at the UN. We get the reaction from the CEO of Datamaran. That's coming up next. You're watching Bloomberg Open Interest.
Another UN official stated in 1989 that within a decade, entire nations could be wiped off the map by global warming. Not happening. It used to be global cooling. Now they could just call it climate change because that way they can't miss. It's the greatest con job ever perpetrated on the world, in my opinion. If you don't get away from this green scam, your country is going to fail.
That was President Donald Trump speaking yesterday at the United Nations General Assembly. With me now is Marjella Lecourt-Alma, Datamaran CEO. Datamaran is an AI platform to help businesses guide ESG decisions. Marjella, thank you so much for joining. And I know you're here as a part of Climate Week, and it is the split screen, right, of climate conversations happening, and at the same time a president at the UN calling climate a hoax. Just how difficult is this of an environment for you to operate in?
It is very interesting times for us. I'm actually really surprised to see how busy it is during this Climate Week. It's my 13th Climate Week. Lots of people coming into this. I would say, the silent majority continues. And that's what we're seeing. We hosted an event yesterday with Kenvue, MasterCard, Applied Materials, and Duke Energy. And essentially, these are all companies that are continuing on their sustainability and climate strategy. I think what we're also seeing is that, extreme weather events are starting to play out in real time. So perhaps we used to position sustainability being about long-term value creation. I think what we're seeing now is companies start to view this as short-term value retention.
It's interesting you call it the silent majority. Are we in an environment where companies just are continuing to do the work, but they are fearful about speaking about any sort of environmental or even DEI work they're doing because it might sort of evoke the ire of the White House?
So with Datamaran, we analyze a lot of corporate reports and we see the narrative change, right? So DEI narrative is changing into inclusion and sustainability and climate. We're using different terminology. When you think about climate change, people talk a lot about supply chain risks, things like that, just to make the business case easier and to translate it into business fundamentals, governance, risk, and reporting. But overall, we do see companies continue, but figuring out how to best, continue in this environment where it's difficult to stick your neck out.
I was just looking at the companies who have changed the titles of their diversity programs. It's like IBM, Constellation Brands, United Health, Victoria's Secret, BlackRock City. I mean, I could go on. There's so many. But what stuck out to me was what Jamie Dimon said in February. In a town hall, he was talking to employees about bias training. He says something like, I saw how much we were spending money on some of this stupid, and then he used an expletive that I won't say, and he went on to say, it really pissed me off. How much of this is also just an excuse for corporations to pull back spending, saying the White House is pushing back. Why would we spend money on this? Let's save money where we don't have to.
Yeah, I think you'll see who's really authentic about this stuff. But I also think one of the good things about maybe this pushback is that companies are being more focused. So last year, also with the Corporate Sustainability Reporting Directive in the EU being at play, there was such a focus on compliance and companies setting up very large compliance systems internally on ESG and sustainability. And it begged the question a little bit, what do we do with when we collect all this data and when we report out all this data? Does this help us actually be a better company? Is this really still about the most material ESG risks and opportunities that we should be tackling? So I think we're seeing a move towards more focus in business, away from the complexity and the red tape.
Does it change what you're doing at all? Because obviously this is an AI-run sort of system you have. Presumably you could kind of target it to other things that shareholders and businesses care about, maybe away from ESG and DEI. Do you change tactic as well?
Yeah, so we're kind of back to 2014 when we started, when we talked about emerging risks and opportunities. And I think it's back into that. And that's also the market in which we want to be seen, so the GRC market as opposed to the sustainability market. So it's pivoting in terms of what's the best terminology to use. But I think there's a lot of opportunities.
What are some of those risks that are sort of emerging that you might want to address?
So I think the obvious one is still, climate change, right? We see 90% of companies setting GHG reduction targets. Most of them have a very clear target on what that means and milestones to reach that target. But then the question is also, okay, what are the other topics that we should be paying attention to from a regulatory standpoint, from a competition standpoint, from a reputation standpoint? So I think all those mainstream business reasons to focus on these new risks and opportunities still very much apply.
Marjella, thank you so much for stopping by. As you're saying, a busy week, which I think you're very happy about that it's continued to be busy during the climate week. That's Marjella Lecourt-Alma of Datamaran. Now, coming up on the show, Washington readies a $20 billion swap line for bond buys for Argentina, giving Milei a lifeline ahead of midterms. We're going to discuss the move with Hans Humes of Grelock Capital. That's coming up next. You're watching Bloomberg TV.
The U.S. is offering Argentina's President Javier Milei a bridge to his country's election later this year. Treasury Secretary Scott Bessent posted on X that the Treasury is negotiating a $20 billion swap line with the Argentinian central bank. Bessent spoke on Fox earlier about the plan to back Milei.
What's the plan in terms of supporting Argentina? Is there one?
As long as President Milei continues with his strong economic policies to help him, to bridge him to the election, I call this the screens moving to the streets. We are not going to let a disequilibrium in the market cause a backup in his substantial economic reforms.
Joining us now is Hans Humes, chairman and CEO of Grelock Capital. He's been at the center of sovereign restructuring for over 2 decades and was a key figure during Argentina's last few bondholder battles. Hans, great to have such an experienced man here with us. What do you see in terms of patterns repeating themselves here? Are we going to see the same movie again with Argentina under Milei?
Yeah, that's a good way to put it. And I think one of the concerns that a lot of people have is that, we went through something similar with Macri, a lot of enthusiasm. And then when sort of the cracks started to appear, the IMF did this big bailout and it became a little bit of a weight attached to Argentina going forward. The question is this going to give enough of a psychological boost in the markets? I mean, clearly, the FX rate, bond prices are all sort of psychological markers for people on how well Argentina is doing. And, this certainly has given a boost. I mean, the sort of benchmark bonds went from 67 to 47. They're back up to 61. So out of the blocks, this is doing what it's supposed to do. The question is the follow through. I mean, the more of the same kind of goes into sort of the weakness on the street that Milei had with the province of Buenos Aires election. And I think one of the things that's kind of really sticks out is most of the coverage here in the U.S. is, the Argentine people, if they're supporting market reforms. If you speak to the people in the street in Argentina, what they're looking at is corruption scandals coming out, with Milei, people close to him, his sister. And there's a bit of a sense that he's more the same, as you said. And once he's sort of not the different guy who's going to change things, that's when his support started to erode. And then the reaction overall, when you speak to people like middle class down, to the way Milei reacted to the province of Buenos Aires results was a bit more, we're going to stay the course. And I think people expect a bit more empathy. Having said that, you did need something to change the psychology of the markets, and so far this is working.
Well, so it's clear then what Argentina gets out of this, Hans. What does the U.S. get out of this? This is an administration that when it makes deals, it has wanted something in return.
Yeah, and this is tricky in a way. I mean, what's interesting is the Argentines signed a deal with the the Argentine Farming Association signed a deal with the Chinese, I think yesterday, to sell the China soybeans. And I think the Chinese are kind of looking at this as a way for possibly them to get some of their what Argentina owes to them paid back. But I think what it gets us is really an extremely strong ally. In a way, it's a calculated bet. If you can, Milei has had so much support for the last 2+ years post-election. It's only recently dipped down. If this can give him a jolt going into the elections in October, then you've got somebody who's a very constructive ally with the U.S., understands he kind of owes his ability to keep on moving to this administration. But then there's, the real thing is the kind of commodities that Argentina exports. They have a lot of lithium. I mean, lithium's been pretty soft lately, but they do export some critical elements. So having Argentina close to the U.S. is a good thing. I would argue, actually, that take that theme and tie the entire Western Hemisphere together, go north-south with all of Latin America, not just Argentina.
Can I ask, we're looking at a picture of Karina right now, standing next to Javier. Can I ask about the corruption, Hans? Because one of the keys to his candidacy was that Milei was going to be a new face and not the sort of the same old government operator on the take. And it's now come out, or it's been alleged, let's say, that his sister Karina has been bilking at least one of his departments out of $1 million a month and potentially more. None of that's been proven. That's just what the reporting has been in local media. Is corruption a problem for Milei, just like it has been for his predecessors?
Yeah, and the problem is that it's what I try to do is just talk to a sort of broader swath of Argentines than most people in the market do. So I've got a good friend here in New York who's a DJ. His name is Matias Joffrey, and he's like my bellwether. He was the guy who gave me a sense that Milei was going to win the election against Massa. And he just says that the expectations of this guy being a complete change, there's so much enthusiasm after the election that when the sort of the inevitable happened, if the system facilitates this corruption, people around the president are going to be engaging in it. So, I think it's more the sense of disappointment and, oh my gosh, this is the same as we've always been through. That really, if you take a look at that 10% swing of the electorate that gave him the presidency and arguably was what he gave up in the province of Buenos Aires, I think a lot of that has to do with the corruption. It's not just with his sister. There was some stuff 6-7 months ago that was going on as well. But yeah, I mean, you speak to people on the street. They're the ones who had the hopes. They're the ones who had to suck it up and deal with an overvalued currency, unable to sort of pay for their sort of basic goods. They're the ones who. Sorry, go ahead.
On the note of the currency, we've only got a minute left, Hans, but Milei said he was going to dollarize this economy. And it strikes me that, at this point, a lot of citizens maybe wish he had right away because the currency is being devalued massively on the black market. Why doesn't he? Why don't they just use dollars?
I mean, the country that I know well that dollarized was Ecuador, and it took a lot of work to do it. And, the problem is you're really going to have to dollarize at a effective foreign exchange rate. And now with the overvalued peso, that's actually one of the things that Malays used to be able to get the headline numbers that he did. It's painful, but there's the currency. To dollarize, you have to devalue. To get some kind of equilibrium in the economy, you'll have to devalue. And let's hope that $20 billion isn't enough to plug the hole, but hope that gives enough confidence and runway for that to be done in a way that doesn't put too much pressure.
All right, Hans, thank you so much for joining us this morning. We appreciate your time. Hans Humes, Chairman and CEO of Grelock Capital. Now, as we head to the end of the hour, it is an equity market this morning that is still looking unchanged, down by 0.01%, with the Nasdaq down about 0.1%. This has been Bloomberg Open Interest.